The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein, and our code is choice, organization, direction, and education, and we offer advice and insurance products to hundreds of advisors around the United States, and locally we have estate attorneys, accountants, other financial planners asking us for advice on how to position their insurance products, whether it's life insurance, long-term care, annuities, and disability insurance. And all these products and all these things they're not just products, they're solutions. And we look to offer the best solutions for you to help you succeed and live a happy life. And I just got back, a lot of things going on. One thing, I've been saying this for months and months and months about the interest rates. Right now, you have a very, very unique opportunity to buy into 5% guaranteed money for 5 years or better. But that opportunity is going away. So why is that going away? Why is it now? Now is the time. I'm telling you, rates are going down the first of the month. And the reason is, even though the interest rates, they've stopped to climb a little bit, but you can see the mortgage rates come down, the annuity rates are coming down. Because the mortgages and the annuities, they all base themselves on the Treasury notes, not the federal interest rate. It's the Treasury notes. So we're seeing everything go down soon. Now, I don't think there's going to be a dramatic drop, but you have an opportunity to take advantage of these high rates rather than be on the tail end and sit back and complain about inflation and the cost of milk. And yeah, I get it. But if you have spare money, or if you're in retirement and you want some safe money, I'm not saying all your money, but you want some money that is going to be safe, that you're going to need for later, why not protect it with high interest rates so that you can help live a nice, comfortable lifetime? So all of our clients we call them sleep at night. We rest comfortably because we're prepared when things happen and the market changes, and it is changing, and the market's been going down. So as the market goes down, more and more money goes into these fixed income assets, which is basically driving down the interest rate, if that makes sense, and driving up the cost. So again, your opportunity window is very short to take advantage of this, and I highly recommend you take advantage of it. Now, a couple great things. Look at all these New York sport teams in contention right now. Very exciting time to be here in New York. I'm a big Knicks fan. Love the Islanders, love the Rangers. I love all my New York teams, and it's nice to see, Yankees, Mets, every hot activity. Good stuff. It's good for our heads. It's good for the market. It's good for the teams. I'm very excited about that. And I just got back from Florida. I was in Florida for the week. I went to they call it a sales convention, but it's really not. It's really an education for me. 25 different insurance companies, all of them who I represent, were all there telling me what their products are, how it's changing. Their products change every day, and it's hard to keep up for anybody. But going there, and many of these companies don't even operate in the state of New York, but they operate everywhere else in the country. And as the market changes, insurance companies are trying to capture what the best solutions are for people. So we're solutions providers, not product providers. We're not more than product. It's solutions. It's how do we help people? How do we help people with their long-term care? How do we help people with their life insurance? And every company out there is trying to capture business by doing, unique things. So if you have old products sitting on, even if you have old term insurance sitting there that's not giving you living benefits for long-term care, or it doesn't have a disability rider in case you get disabled so you don't have to pay for it. A lot of the new products have all kinds of good stuff that you might need for your lifetime that they didn't have in the past. And that keeps evolving. There's one company that's doing, if you can't get a long-term care rider on their life insurance, they're automatically giving you a chronic care rider, which is similar, but not a pure long-term care rider. And they're giving that to you, regardless if you have health problems or not. So I thought that was great. And then I had a chance to visit a young friend of mine who in St. Augustine, who's from Center Moriches, had a store in Center Moriches, and his name's Ryan Kunch. What a fantastic human being, an entrepreneur, and he started out as an artist, and he's a terrific artist, and he had a little store in Center Moriches at one time where he was trying to sell his artwork, and he sold some, and he was doing T-shirts, and he also brought in other local young artists on consignment and had this shop going. Unfortunately, it didn't last that long, but he moved to Florida where he went to college, and he opened up a store called Sarbez, and he first opened it up, and he had a nice place to have his T-shirts, and he brought in local musicians, and they were playing, and then he started a cafe at that place where he was serving grilled cheese sandwiches. Now he's selling grilled cheese sandwiches 27 ways, and you can play games there and everything else. Then he got a beer license, and the store's booming. It's going fantastic. I was so glad I got to see it. And then he said, well, why don't you meet me at my new store, which is just opening today? And I went there, and I go, what a happening. He's got everything around him. It surrounds his enjoyment, you could tell. And the community. So every Wednesday night at his new place, they have community people, with hot dog vendors and musicians, and it's an event. And inside his place there's a pool table, there's a dartboard, there's a big Scrabble board, which I love Scrabble. He made the environment his, and now he's extremely successful. And this was an artist, not your typical, I'm going to school and doing this. He's following his passion, and he's making it work. And what a true testament to a great young man. Now has 3 children, young 30s. And he's doing it. He's making it happen. And he's making it happen in his world. And what a great thing, and I was so glad to see him. So that was what Florida was all about. And business-wise, we are, we usually go through about 50 to 100 policies a month is what our usual flow is. And we recently had 1 or 2 declines, which I hate to talk about, but, why would they decline? Well, one's very interesting, and we don't get many declines because the way we look at a situation, the reason that people get a decline or they decline for coverage, whether it's life insurance, it's long-term care, or anything, is the biggest reason, the number one reason is they don't disclose up front what their situation is. If you disclose up front what your situation is, we can cultivate your situation and get you the right carrier and the right product. And why is this important? Because many people today want to buy online, or even young insurance agents and whatnot maybe aren't trained in the old ways. The old ways are you really find out what people are looking for, what is best suited for them, what are the best solutions. And when you're upfront about your medical and your background and everything else, you can then put them in the proper product where they don't have a declination or a problem getting the coverage that they want. And anybody that does get a declination, it penalizes them for the next carrier they go to. So that's why you have to reach out to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I can be heard here every Friday at 3 o'clock, 631-647-4694, or you can always email me at themainstreetcode.com or look at my website at mainstreetplanninggroup.com, where you can see videos and old radio shows that we've done, as well as Spotify and Apple. We're always here for you, and we're going to be right back after this break. Thank you so much. Welcome back to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein, and you can always reach me at 631-647-4694 for any questions or comments and anything you want to talk about with your personal finances. We talked about some of the things that happened during the week, me being in Florida and running into all these companies, and me running up to Ryan Kunch, who has a store named Starbez, Sarbez, and his new store, Mugsy's, in St. Augustine, Florida, from right here in Center Moriches. A young success story. Loved it. A big shout out to Ryan. He's doing a fantastic job, and he's enjoying it, and he loves it, and he's being successful. From artist to entrepreneur. How great is that? So we talked about that. I was in Florida, learned about a lot of different products, and a lot of different things, a lot of different tax changes, a lot of different moving parts. There was a big lawsuit that can definitely affect your business. So if you have what they call a buy-sell business, we talked about this in the past many times, where if you have a company and you have a partner and you have another partner, that you need to set up some sort of agreement that what happens to one of the partners. So, what happens if one of the partners passes away? That's called a buy-sell agreement, because if that partner passes away, do you want to go in business with that partnership spouse? Because automatically, if you have no plan, you now have a new partner. Forget about Uncle Sam. He's always a partner. But you now have a new partner, unless you have some sort of insurance or agreement that will pay off that partner their share of the business so that you can effectively run your business. Now, that may work for some people. And even if it's just a family business, we have situations all the time where we have a family business and one child's going to run the business and the other two are not. And the parents want to give that one child the business because they're running the business. But, they have let's say they have a lot of money and they have a lot of other things. Well, how's that fair when the bulk of their money is in the business? So a lot of times they'll buy insurance to pay for that equalization so that the other children can have money instead of this ongoing business. So insurance is bought in that way as an agreement. Even if it's a one-person family business, this occurs all the time. You need to set up what they call buy-sell agreements so that, one person isn't suing the other, or the kid that's not in the business all of a sudden says, oh, Dad died without a will, and I want to go into the business. I don't know much about car parts. I've been selling insurance, but I want to go in because that's a great business. Well, that's a problem. And you see it all the time, and a properly positioned buy-sell agreement is important. Now, there's two types of buy-sell agreements in the past. They have what they call cross-purchase agreement, which is, let's say I buy insurance for my partner, and my partner buys insurance on me. They call that a cross-purchase. Then there's been something called an entity purchase, where my company will buy, and if, let's say I have three partners on a cross-purchase, Let me tell you what the problem is there, or 4 partners. What if I have 4 partners? Well, then I got to buy 4 times 1, 2, 3, 4. I think 12 policies, because I need a policy on each person. They need a policy on me. They need a policy. So that, that part of the business I can have when they pass away. So it can get tricky and complicated. So then they have something called an entity purchase, where the entity purchases the policies. Now, the entity, meaning the business, purchases the policies on the different parties. And that's one way to do it. And those have been really the 2 type of policies. Now they have a brand new, I mean, because of a lawsuit, because of this that went sour, called an insurance LLC, where the LLC is a separate organization. And one of my good attorney friends have set something up very similar in the past, a separate trust owned by the corp that buys the policies on the owners. And why would you want to do that? Because what had happened in this recent case is the insurance company paid out to the entity, and the entity was valued at whatever it was valued at. Let's say it was $1 million. Well, now the insurance proceeds added to the value of the business, and it created an estate tax problem for the beneficiaries. Brand new. So companies, and people and attorneys are looking for solutions in order to avoid a massive tax situation occurring. So one of the solutions is to create this separate entity to hold the insurance policies. I know it doesn't apply to everyone, but these are things we get involved in, and why you need experienced people, and why you come to Main Street Planning Group, because we are experts in every area regarding insurance. Not only the product, which product for your health, but the best solution for your situation. Whether you're an individual or a corporation, we have the expertise, and we have a network of professionals that we rely on to make your life successful. And that's so important. And I talk about this all the time. You need to have a financial team to be successful. You need to trust each member of that team, but you need a team leader that can keep everything going in the same direction. And I use the example of some very successful people. Not even, okay, they go along, we get married, we have 2 kids, and the client gets divorced. Okay, then he buys another house with his new wife, and he has another kid, and he never updates his insurance policies. What happens? The beneficiary of his first insurance policy he took was his wife. But that was his first wife. And he passes away suddenly, and guess what? His first wife is entitled to his whole life insurance policy. Why? He hasn't updated his plans. Or he included his first kids, but not the new wife and the new kids. So they're cut out completely. Planning is an evolution. And while he may have had the best real estate attorney for all his transactions, he may have a great accountant. He may not have an insurance person who keeps up, or he doesn't keep up with his insurance person. And he may have an investment person. But if all those things aren't in line, this is the kind of thing that happens. Things don't go the way you want them to do. Or you incur some unbelievable taxation down the road that you weren't expected. Or you have a health event where you can no longer control things. When we talk about insurance and insurance products, the best time to buy is when you're young and healthy. Why? Because when you're young and healthy, the pearl, what is that expression? The world is your pearl, something like that. Anyhow.
The world is your oyster.
The world is your oyster. There you go. Thank you. The world is your oyster. So when you're young and healthy, you have all the choices in the world to make your life perfect. Okay? When you are old and maybe not so well, your choices are limited. So we like to do long-term planning And it's so important that you do when you're young, and continue to do and continue to update your plans. Even if you're 40, 50, 60, 70, 80, and 90 years old, there are still things that can be done so that you can live a great life and pass on your precious things to your heirs as you move along. So I had a great limo driver down in Florida, and he told me to say, live a great life. Live a great life. That's all he could say to me is live a great life. It doesn't matter how much money you make or everything else. Love your family, be close to your family, and live a great life. I hope he listens to this show, because a shout out to him as well. He's a wonderful person. You're listening to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. You can catch me on Spotify and Apple if you happen to miss my show every Friday at 3, or go to my website, mainstreetplanninggroup.com. You can check out all my old shows there, or give me a call if you have a situation, 631-647-4694. Have a great day, everybody.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its